All right.
Welcome everyone to today's webinar. It's the 80-20 of not having a clue. So just a little context to what we're going to be doing today is we want to build a simple, repeatable system that we can scale, we can test, and just easily build a trading strategy just from day one, having zero knowledge and just what we can do to go forward, getting people out of the woods back on the path to success. So my name is Shane. For those of you guys that don't know me, I've been trading for about 2 years, sim for the most part. I've been with Avi for a year, and from that, we'll get started. So this will be our syllabus for the day. We've kind of touched a little bit on introductions. We'll go into my background a little bit. We have two different audios that we'll listen to. One is 2 minutes, one's 3 minutes. This will be the motivation section, and then this will be the inspiration section on the way out. So after we do that and we kind of know how we want to execute all this and obtain it, we will talk about the basics. And I will say that a lot of my webinar has a lot to do with what I learned in BBT and the mentorship that I've taken coming through that. So off the bat right away, you're going to see what Thor calls the when, where, how of trading. Easily taken from him, all the compliments to him. That's how I learned when I started going out on my own, figuring out what it was that I wanted to trade. So we'll go and break these down individually. Before we get into the journaling, we'll talk about the 4 pillars and how to bring all these 3 together. And then we'll look into journaling, my version of backtesting, and how I evaluate my performance and going forward. I'll show you a quick little screen layout because it's going to be a few slides as we keep going. And as you start looking at everything as a whole, it may look like it's going to take up a lot of real estate, but I will show you that it does not. Then we'll hit you with the inspiration audio and we'll be on our way to Q&A. All right, so we'll move on to the background. These are just some of the highlights from my career in industry. I'm 37 years old, been married for 7 years, currently live in Kansas City. So when I moved from my small little town, I worked at a casino industry. And then when I moved to Kansas City, I started a bigger casino. I was in that for about 10 years. A lot of skills that you need involved in that. Mental math, stressful environment. Anytime somebody loses, they're mad at you. You're the one that's in charge. Mental endurance, doing that every day, expecting really bad results. Hand-eye coordination, and of course, patience. And I threw the definition there as well. The capacity to accept or tolerate delay, trouble, or suffering without getting upset. So a lot of things that we do in day trading going to cause patience. And obviously you see it everywhere that I've been. I've practiced patience and analyzing data, whatnot. So after we got out of that industry, it was kind of done. My wife was getting out of college. It was kind of my turn later in life. I was about 30, go to college. In the midst of doing electronics and trying to get that degree, I started a job at Garmin as an apprentice. There was about 5 of us that applied, 4 of us got accepted. Immediately, they were throwing us into troubleshooting and looking at schematics and everything that we'd learned, soldering techniques, highly detailed procedures. This was like trying to tell somebody how to test $1,000 to $50,000 piece of equipment, but it literally has pages of just pictures and very bold text that so simple, even a child could do it. And that was kind of my first introduction to process documentation and how I should explain things to people. Also, all these things come in conditions of minus 20C, 25C, and 70C. So these are some of the electronics I worked on. It's as impressive as it can be. You work on little silver boxes every day, and you're looking at schematics sort of like this. Testing every little data point, just trying to find one failure for the unit not to work. And then what made it even more frustrating is this unit right here could fail at just a cold temperature or just a hot temperature. So you throw it in the cool temperature for an hour, and then you get about 20 minutes to work on it before you're no longer in that procedure. So that's very frustrating. You might have 4 or 5 units testing cold every day. So as I started getting away from that job, that just seemed sort of like pushing somebody in the corner because there wasn't enough to do. And as adamant as I was to learn everything about the business, it just seemed like I was getting pushed in the corner a lot. So I wanted to go work on something a little more hands-on and bigger devices. So in the process of getting my electronics degree, I ended up moving to automation as well through the convincing of my teacher and another student. So I started working on that. Got a summer internship from that. I was building control panels, and as you can see, all these huge enclosures. You got to wire every single terminal and put a tag that goes to it. Then they move you out into the field where you get stuff like this. That's amazing to deal with. And once again, schematics, doing everything line by line, place by place, except for in this condition, there's a bunch of red marks on a screen and you don't know who the signature is by, or even if that person works there anymore. So you might just be led to a dead end. And then building screens after I did all that. And I know some people have given me some flack about my gray screens and some of the other things, but I will tell you that there is a rhyme and reason behind all the stuff that I put on my screen, and it has to deal with HMI High Performance Handbook. And even the company I worked for had a book and standards I had to read. And yeah, that's exciting stuff. But you can see all these components on a layout of this. So like this little hourglass looking thing is a valve. This is a pump. This pump right here could have all these data points, and it has to deal with overcurrent, undercurrent, suction valve, discharge, everything that can fail. And this is just one component of this. So going through all these data points to make sure everything works as intended. What's hard to realize is on the other side of this screen, there are real people in real danger if some of this stuff doesn't work. So it's kind of more of a situation where you need to really be in tune with some of the text and things so people don't get hurt and killed. There was actually Medford, Oklahoma, 2022. There was a power plant explosion. We were there. I was there in training 2 weeks prior. Granted, I wasn't anywhere near the explosion, but that would have been pretty scary, and it had nothing to do with what we were doing while we were there. But got some different degrees, different certificates, whatever, whatnot. SCADA programmer, organizing data, more or less. So kind of got tired of doing that. Their safety standards were starting to kind of hit a leak on some of these things, and it did scare me because I didn't want to be part of somebody getting hurt. So I knew it was time for me to go out and start making my own dreams. And there was a couple of different business ideas that I were going to attempt. Then I kind of moved on to, I did want to have a product to sell to somebody. I didn't want to offer a service. I didn't want to have to travel. And so I was trying all these different options, looking at different things, and of course, day trading came across. Zero product, zero manufacturing capabilities, and I don't have to deal with customer service. I'm literally one entity that is in and out of the market as I can be. And so even with all this oil and gas and all the hats that you had to put on between programming languages, different instructions, trading was by far the hardest because you're a risk manager, performance manager, psychology manager, data analyst, a better loser. That is one of the first things you're going to have to learn, becoming a better loser. Because if you think your win rate is going to be higher than 70% or something like that, you're probably taking 1 to 2 hour trades, and that can lead to other problems that we'll get to later. Favorite quotes: success is nothing more than a few simple disciplines practiced every day. I have a short little video in the psychology section in the Discord. It's about a 30-second video, talks about Jim Rohn and this quote in particular, and eliminating the errors and replacing them with disciplines. Second quote, you may know this person, famous actor: a roof is a man-made thing. We will get into that a little bit later, but sometimes when you're in this transition period of getting out of a steady job and kind of going out on your own, you look for inspiration in places that you might necessarily think that it's where it's going to be. And for whatever reason or not, I end up having his book called Green Light, and I had an audio book. I had a drive from Las Vegas to LA, taking the in-laws, and we were doing about 110 with the 6-car carpool for the whole trip. It went by fairly short, but everybody sleeping in the back doing 110 on the highway was interesting. But listen to that book the whole way there, and I have listened to it about 6 times since then, just to kind of really get the thought through. And that's what some of the audios are that you're going to see here in a minute. So now we're going to move on to the audio 1, motivation. Before we do that, that is actually a 2-minute. I started creating different AI images for this layout, and it came up with this one, and I thought it was kind of funny when I looked at it. So if we picture this as our trading system, it's not very pretty, but it does look somewhat organized and it does look well pieced together. And then we bring in this wrench. And it's funny how AI expected this wrench to actually do something to this particular setup. So then when I started looking at this more, I started looking at all the tools of the table, and I'm just realizing that our setup is something simple. It's just an indication of when to enter the trade. It has nothing to do with, you can look at this and say, this is book map, spot gamma, EMAs, just all this extra stuff to tweak our system. But yet it's not a part of our system. So I just want to be aware of all the tools that are available to you, but not necessarily the tool that is going to tune your performance to the way you want it. So with that, in that example, we'll go ahead and get started and we'll do the audio.
First, we have to put ourselves in the place to perceive the truth. This noisy world we live in, with its commitments, deadlines, fix thises, do that's, and expectations, make it hard to get clarity and peace of mind, famous or not. So we have to consciously put ourselves in a place to receive that clarity. Whether that's prayer, meditation, a walkabout, being in the right company, a road trip, whatever it is for each of us. Then, after we've put ourselves in this place to listen to the gospel and hear their music, we then have to be aware enough to receive it and conscious enough to recognize it. It will arrive nameless because it is clear, omnipresent, unanimous, and infinite. It usually lands like a butterfly, quick and quiet. When we let it in, it needs no introduction. Then the relationship can begin, and we need the presence to personalize it. This is where the anonymous truth gets intimate and becomes autonomous. We ask ourselves what it means, how it's unique to us, and why it's here now. Then comes the harder part, having the patience to preserve it, getting it from our intellect into our bones, soul, and instinct. We must pay attention to it, concentrate on it, keep it lit, and not let it flutter away. This takes time, commitment, and tendance. If we make it this far, after we put ourselves in the right place to receive the truth, recognized it as such, made it our own, and preserved it, then comes the coup de grace, having the courage to live it, to actually walk away from that place where it found us, take that truth with us into the screaming arena of our daily lives, practice it, and make it an active part of who we are. If we can do that, then we are on our way to heaven on earth, where what we want is what we need, where what we need is what we want.
But anyways, we're here. We're at the basics. We're at the top of the burger. We're at the bun part. So before we get started in the basics, we're going to start with the where. Can anybody tell me the where of what we do in this community and where possibly we're going to take trades and exit trades?
Purple lines.
I see purple lines. I see Avi levels. And sure enough, boom, simple enough, Fibonacci levels. The location. Where are we going to take these trades? Nice and easy. And if you're not familiar with the Fibonacci levels, 8 a.m. candle, there it is. All we're going to do is take a line, put it at both equal distance, and then have measured moves above it and below it. So the plan basically is enter at the level, start exiting at the next level, and vice versa. Enter here, exit here. And that's just as simple as that. If it's in this middle range, we're not looking to touch it. We're just looking to analyze. If it's at the level, we're looking to analyze and maybe take the entry if the setup appears. So with that, that's simple. The where. We're done with one slide. Boom. Setup. Setup's a little bit tougher because it's the when. When are we going to hit the button and enter the trade? When is the apple exactly ripe? Not underripe, not overripe. When is it just right for the picking to enter the trade and it all makes sense? So from that, I have created this. If you've never seen this before, this is Avi's basic trading setups, and I just wanted something that everybody was familiar with. I didn't want to go off cuff and start making different ideas and things. And like I said, this is not going to be a strategy webinar. This is going to be a step-by-step repeatable procedure on how we can start setting up these trades. So something super simple, we're just going to do, oh, I got to switch this screen. Okay, so we're just going to pretend that this is 30-minute candles. Here's your 8 a.m. candle. We drew our lines, equal moves, quote unquote equal moves. So we're going to picture this as our action starting. Well, we know that this trade will work pretty well. It's a breakout trade. We've got this nice uptrending move. And then we're going to have our candle. So this is going to be the most popular one that most people see and most people start out is the 5-minute ORB. So now your question is going to be, what does this trade look like and how are you going to enter this trade? Well, we're going to go long, so that's easy enough. We're going to do that. We'll go long. Now the question is, are we going to go long as it breaks the level, or are we going to pre-fire, as some people say in this room, and we'll be right here and enter? Well, if we start looking at it, okay, we're going to do the top side, right? And just say, okay, it's going to break. Well, this doesn't look too bad. This doesn't look too bad at all. What about now? Is that your trade? Is that still your breakout trade? Is that still your breakout trade? And you got to think, this is just a 5-minute candle. This is not a 15-minute or anything like that. Because if you start doing this and saying, okay, well, this is going to be a 15-minute candle. Well, what does that wick look like now? It's got enough information. Is this going to be your trade? Is this your breakout trade? Is this what you're looking for? Maybe not, but maybe. Not sure. But as we're starting to look at this, maybe it did just pop down and come back up. Do we have some consolidation going on underneath the level? What trades do we have that mimic that sort of price action? Well, we got this guy. That guy makes sense. Well, now we're getting rid of that breakout because now we're needing more confirmation because we've got consolidation now. What we want to not run into is equal opportunity. If this starts to consolidate in a wide range, we want to see an equal opportunistic move for the entry, right? Because we can start to edit this. Is this our trade now? Did it get a little bit too high to our target and we should have taken the ORB trade and then it went to our target and now it's coming back? Look at this. That's going to be tough to catch. Is this your trade? A little bit lower than this and less consolidation, just a few examples, but this is something to play with just to see what does my setup actually look like. And I did see a lot today, and this is what the market maker likes to do here recently too. Likes to do this little thing. Likes to do this little guy. And now, instead of the nice easy plan that we had of being like here, to enter here, go long, it's kind of chopping up longer, trying to draw us away from the edge of where we want to enter. Because now this trade is saying, oh, well, I've got some consolidation here and I got a breakout. It's testing the top. Yeah, sure. But now look at you. Your stop's going to be there, and then your stop's going to be somewhere there. This isn't what the RVR was when you first started out. This was the trade. This was the trade with your stop here. This is just something to walk through and see what your setup actually looks like and test your true entry and not getting walked out of the trade. Now, if you get a lot of FOMO and things, I did come up with this sort of idea where you can take a snapshot of your trade, crop it down to whatever it is that you're wanting to look at. You want to come down to size, position, up here in the picture transparency, make it a little bit more see-through. And start testing out different things. Here's an Fibonacci level, so maybe take a long entry there or so, but start trying to piece together what this might look like. Obviously, we probably can't get this trade. There's not really that good of a consolidation to break out and retest. Yeah, it did break out and it retested, but did we get any sort of consolidation or anything before that, or did it just go? And that'll be just enough examples for this one. At the end, if we want to go over some more stuff on long-term strategies or playing strategies together in sequence, we can go over that at the end. And if you made it this far, bonus content. We're going to talk about algo theory. And I was trying to come up with a way, the simplest way to explain this to someone that is very new and may not understand what we're talking about when we're saying the algos are kicking in, manipulation is happening, or what I would like to call teamwork within the market makers. So I want to start out with something super easy, a moving average. And Wyckoff stuff, we're going to be looking at this advancing sort of style. So I'm going to start the video, and then I'm going to give it a quick freeze frame just to kind of explain the context of what's going on here. Oh. Okay, so we're going to picture this as the market opening. These are all your orders. We'll call this right side your price levels, and this is just the volatility that people want to get filled. But what's going to happen is this is a simple sorting algorithm and how the market makers could use that to their advantage. So you're going to start seeing all this liquidity start, as the market opens and it starts coming up and down and up and down. We're going to start filling in orders and start tiering the book, as you might call it. And you'll see it on Bookmap. You'll see it on different level 2s and things like that. But here we go. So we start to level out the book. Now what we can do, oh, you son of a, right there. So now that we structured the book to the top side, as in bullish, we could start using EMAs to start sending scanners to the top of the liquidities and the bottom. Start making price go up, comes down, bounces off a 9 EMA, goes back up, gets far enough away from it, comes back and touches the 20. Look at this one. You expect the 9 just to kind of be on the tight wedges, and then some of these are the 20. Just use a simple scanner to scan the top of the liquidity and the bottom as we go higher and higher. As long as it doesn't break the 20 and we increase volume as we go, just keep scanning over and over and over again until we meet the target. And as we get higher, obviously, we're going to run out of options, and it's just going to be slower price action. So this one will be done with a simple moving average. Now we're going to do what I call Zen balance, which is also what I like to call Friday or witching hour stuff, which has to do with contrast and expiries and things. But Friday overall is what I like to call balance, because you've got people on the top side willing to sell, and you've got people on the bottom side willing to cover. And so on Friday, you're trying to get out of those positions. And so this is probably what you can most likely see. The range getting tighter and tighter, or ordering, cycling the orders at price levels, and we just get smaller and smaller until we finally make a range, and then we break out. And that's kind of where we're looking to trade, as it gets smaller and smaller. Not these big, wide ranges. But it's just an option. Complete it. This one's probably the most complex out of all of them. Talks about reversals, and this one will have 2 different styles, the V reversal and what I have kind of invented as the auto offer. And actually today, do we have any sort of examples, quick examples today? Something like this could make a little bit sense, the cues. As it's going down, they start to realize that the order is kind of filling here, and then I'll show you the example. So the market opens, they have all this liquidity, and they start tiering it. We're starting to fill the orders at the top side. So what we do, start to consolidate up here, and then all of a sudden you get we'll call it a random user, and we'll call him Bobby. Bobby with big volume gets in right here, and they know based on this size, he could probably be looking to target anywhere between this range. So they're going to keep an eye on a large order, on a limit order or something, that's showing that this buyer is down here. So we're going to start stacking it lower and lower. Nice, easy price action. Looks like it's going to be a trend day. Oh, done. There you go. Looks like it's going to be a trend day to the downside. We just see orders to the downside. That's all we see. So as we start making our way down there, what's going to happen? We're going to get down to this little volume right here. And whoever was up here that we were looking for to cover, we're going to start using that liquidity to push the price back up. Now, what you're going to see is, in this example, a slow trend of pushing the price back up. This is what I would call the auto offer. And that's the market makers using as little volume as possible just to push the price back up into these areas so people will stop out. And they have to make a decision. You want to make a low profit, a break even, or hold it all the way back up here for a loss. And those market makers need to make a decision, the algos too, whether they hold the position or not. So right here is where you have the pivotal action of it's hit the bottom, it's starting to consolidate a little bit. What if they use his exit and they liquidate all this section? You're going to see a huge rise in volume and a huge push up, the squeeze. instead of this auto offer of just slowly stopping people out, you can use this liquidity and fill all these orders along with stopping everybody that went short here in just a big squeeze. And that's just kind of that little example. And honestly, this V reversal and things like that kind of look like this little pattern. I guess you see these big V reversals right here, kind of come up and push the volume back, push the volume back, push the volume back. A little bit of distribution. And when we're talking about Zen balance, accumulation, distribution, two big parts of the market that just happen. We're going to fill all orders to the top side to move liquidity to the top. We're going to buy at the bottom to average our position up. So now we're going to move on to the campaign, which is strictly just filling orders. Understand most of the market makers don't care where the price is. They just care about filling orders. So for some of you that don't understand options just yet, I will try to explain this as best as possible, but imagine this as what we talk about on the SPY, 0 DTE, these pink orders. That's what's going to expire today. So you need to make a decision or fill your position by the end of the day. Then we'll call this 1 week expiry, 2 weeks, 3 weeks. This lime green will be 3. And then we'll just call the blue and pink month 2 and month 3 of the quarter. So if you're looking up here and you're saying we have 100% of orders we have to fill and how hard it's going to be to fill these orders, if this is still priced, look how low we need to get to price to fill the 0 DTEs compared to what we have in the future at higher prices. So as we start to fill higher prices, we're going to want to shoot the price lower to fill these orders as well. And like I said, this is just filling orders. This has nothing to do with where the price is going, bullish, bearish, or anything. Just look at how much options we're going to run out of as the expiries lower. And as we get closer to what just happened, the quarter ended, and we're in July, we're really going to be sorting these books out to start pushing price where we need to go, because we're halfway done with the year. So now is more important than ever to fill these things and fill them correctly to push price where we need to go. And then now we're talking about swing trading ideas and things of that sort, and unbalanced books. And we get to about here, and this is kind of our realm of small liquidity that we're trying to pick up from. Contracts are starting to expire, so we're getting those cheaper prices. But also the markets aren't going to move as much either, because we don't have as much options to pick from until we go into the next conquest, aka the next quarter or the next year or whatever it is they're trying to fill. And then the last example is just a gladiator, and that's going to show just natural price movement within the market. We can call this $100 at the bottom. We'll call this, 200. 300, 400. They're just moving liquidity to a higher point and then moving further into the future to only come back to grab more liquidity and move it forward. If you've ever seen this, as Thor calls it, moving the dirt. So you're going to start seeing a big disparity on the lower end. We'll call this NVIDIA under $100, and then this will be NVIDIA above $100. It's going to take a lot more patterns and a lot more organization to the top side and start filling the book up into a ladder. That way, if we do fall or have a couple bad news days or tariffs or war, we can fall upon these liquidation areas to hold us up. Now, what you're going to see is the big split. So now you've got max amount of liquidity as high as you can go, aka NVIDIA right now. We've got as high as orders we can go, but we also have liquidity, a lot of it that we need to grab and bring it to the new front. So this is where you might see the book flip that people talk about. So right here, boom, new quarter. All the books are set up. We're starting to buy options contracts at different rates, at different lower, and exiting positions, and start moving all the orders to the top side. And this is just how the natural market moves every day. So when we get a big sell day that doesn't make sense, we just might be going back to grab more liquidity to move it to the top side. And I mean, this whole sequence right here could have been 5 years worth of information, could have been 1 day's worth of information on just how they move the book. More often, this would be about a 6 month to a year idea. And that's kind of all I have for this one, and we'll just move on. The final part, the how, the plan. with everything that I just explained to you, these forward ideas and executions, what are the two things that we control in the market? Oh, Vinay, the red lines that were they were just like scanners. Like picture that as them scanning the top side and the bottom side. They just keep running a scanner saying, where are my orders? And just constant information update. Yeah, and we can come back to that too, Vinay. I just want to make sure I hit every single bullet point within the hour, and then we can come back and we can spend as much time on that as we need to. Bam, Ara, nailed it. Entry and exit. Those are the two things that we can control. We control when we hit the enter button, and we control when we exit, whether it's at -1R or infinity, or beyond 1R. That's bad behavior, but that's what we can do. And so from this screen, I'm going to bring up what I call my daily driver, which is this guy. So we're already aware of the location of where we're going to take the trade. We know where we want to exit. We are also looking at the when. When do we want to push the button? Okay, so we've done all that. Now what do we need to do? Well, we need to work on where we're going to stop and where our target is. And I'll be first to tell you that this is not 80-20 at all. This is the 2 years I've been working to develop this and do a bunch of backward soft ground stuff. And what I can tell you is, for simple, is if this number is under 10, it thinks it's an options trade. If it's over 10, it thinks it's shares. So if I just put $5 here, here is my ladder order of how much stop loss I need for how many contracts I would have. And some of you might say this is not right or whatever, but it's based on your taste, So we could just do a simple trade here, and I can show you how I would walk through a trade if I was going to add to it. So we'll call it a $150 stock, and we'll say something nice and easy. We'll do 50-cent stop loss, $0.50 of the range. We're going to go from 150 to 151 minimum, and that's what the play we're going to look for. So we're going to do 149.50. And boom, it gives me my 3, 4, 5 profit zone, and it gives me my risk, how much buying power it costs. It's not over my max, because if it was, then that would turn red and tell me the trade is no good. I'm outside of my range. So from here, let's say we want to add into our position and take 50 more shares. Well, we could do all the mental math and click this and click that. What I found is this is what I like to do. I'm going to hit enter. I'm going to hit that. I'm going to hit, plus or minus, whether I'm going long or short. We'll just do minus. And I know it's 50 cents, so I can just hit that. Same setup, nice and easy. I'm going to add 50 shares. Click this, bring that down. And when I hit enter, watch. I'm already on my entry. So now all I have to do is hit the button, look, and I can say, okay, well, now my average changed. It went to 150 and 10 cents. Look how nice and easy in transition it shows me where my profits went, where my new stop loss is. And if I want to take another entry, I double click it. I would just go straight to here. And there's my new entry. 200 shares, tells me how much it's going to cost, where my new profit targets are. Nice and easy. Just step by step walking the trade. Because I do hear some people saying, well, I couldn't figure out the calculations, and doing all that live and making sure it's correct is tough. So my brain is not a storage machine at all. It is a processing machine. I do not want to remember anything. I just want to execute in real time what's in front of me and just keep going. So from there, this is just the step-by-step on the how. Should be nice and easy. Your entry, your stop, what's it going to be? I do have a shares correction. So if for whatever reason I had 222 shares, it would tell me that this stop loss is going to lose me that much more. So what I could do is I could just on the dash screen, put it out, 150 or something a little bit higher that's going to be inside my stop. Just depends on what your flavor is. I know some people say I take $50 to $100 risk or whatever, and this would meet your criteria. Simple, easy. I like to be more precise, right at 1R, keeps all my stats nice and easy. So from here, we're going to start transitioning into the statistics, the data, and the journaling side of it. So we'll call this, and NVIDIA obviously wasn't there. We're going to say it was NVIDIA, and then we're going to say that we took a stop loss on that one. And then for whatever reason, we took another entry at, we'll call it 07, and then we'll put our stop. We're going to say we have one winning trade, one losing trade. We'll call this, we're going to say the second time around, we did not even try to get full size. We just got that. And we got up to this 140 or 152 range. Let's do, yeah. And this one was a profit. So with this journaling software that I have, it is, we can go over this a different day. I know you guys like to go over different documentation, but this is just what I have to do with my process because it doesn't have a monthly fee. But as you can see on this side, there's a little bit of a shortcut. If you hit Control and you hit your semicolon, just the key to your left, you can come here and there's your date, hit a space, hit Control and Shift, and that semicolon, and get your time. That one's set up, ready to go. I can do that one as well. We'll go ahead and change the time of this one just so it was a minute or two difference. And then we type in how many minutes we have for the trade. We'll call that 5 minutes, okay, out, and then we'll call this one 25. It doesn't really matter. It knows that it's long. If I were to change this to condition, it knows that I'm going short and it changes this to short. Just an automatic process of just doing everything to eliminate. See, it already puts in my strike price, easy enough. It knows what my shares are, easy enough. Risk is always 50 or whatever's in this box. So we write in our trade. Oh, and we'll say a 2-minute chart, 2-minute chart. Result we'll call minus 50, and then profit zone is here somewhere. We'll just say we took the minimum and we just did that. So another shout out to the BBT is Mike's category of trade. I've kind of influenced it into my own little style. So if you're not familiar with his categories of trade, he has a 1, 2, 3, and a 4 category trade. 1 being it was a good setup, it was a good trade, and it was profitable. 2 being it was a good trade, it was a good setup, but it was a loser. 3 being it was a bad setup, you didn't follow your rules, and you lost. 4 being it was a bad setup, but you profited. And then the addition that I have onto mine is the dot number, and the dot number is the exit process. So in the first process, you have to ask yourself, did I stop out when I was supposed to? Did I do my trade? Yes, I did. Did I stop out when I was supposed to? Absolutely. I took 1R. Entry process. Was it a winning trade? Did I abide my rules? We'll just say yes. Did I stop when I was supposed to? Well, it was in the profit zone, and I got that. I'm going to say yeah. Boom. I have one okay execution and 1 perfect execution. If I need to, I can write, a trading error, read, whatever, fine. And notes, you just write whatever. So as you can see here, I've kind of put like an overflow on just orders I have had in the past. So now you're going to ask, what do we do with all this information? It's just flat data, just looks flat, doesn't look like it's anything. So we're going to move over to the journaling portion because we're kind of moving away from the how. How are we going to do it? Well, we know we're going to enter an Avi and The Avi8ors level, partial at the next, or not partial, but exit at the next level. And we know when the profit zone needs to be in that area. If it's not, if it's too far out, obviously our RVR is way too far off. If it's in the middle of the range, maybe we went too heavy, whatever your style may be. So with that, we're going to bring this chart over. So you would just copy paste the trade into here, and we'll go ahead and I guess I don't need it. So you would just paste it here. You can come here, hit this, and there's a special text you can put. So for me, mostly, I don't leave off this screen. My day will end with me adding this entry to this. And as Avi says, I will wait till the end of the quarter to review it. Well, we just ended the end of the quarter. So I will go ahead and I won't say shamefully, but I will show you the data that I have collected and everything that went on last quarter. This is not it. This is it. So it takes a minute to load. And bam, there's our trading. So before we start to do any of this, I do just want to go over my 4 pillars and how all of this data management kind of gets mixed into it. First one being time management. And we're kind of always talking about, take your trade, enter at your 80%, and then hold on for that longer target, or just holding on for longer targets. Well, this week and last week were a lot of like low volume days. Are those the days of non-trending days that we're going to try to hold on our trades for longer? Or do we think we could go read a book and gain more valuable information with our day? We're having low volume throughout the whole day. I'm not going to just sit there and watch slow moving charts all day. I'd go mow the grass, go do something, come back in 30 minutes. You'd be amazed how many times you walk away from the computer for 10 minutes and then come back and go, oh, nothing happened. 0 happened. Okay. And we talked about the how, plan the trade the plan. Stick to the plan. You took time out of your day to set up that trade. Don't pay extra in losses. You don't get a ticket from you don't go out and get a speeding ticket and go, oh crap, and then go to the courthouse and pay double what the fine is. Pay your fine and move on with your life. Don't pay more for what your trade idea was only what the value is more than worth. And that brings me to the next one. Don't blow up. Just don't blow up. If you're going in, trading your plan, then your 1 hour stop is the plan. And guess what won't happen if you just keep stopping out of your 1 hour? You won't blow up. Now there's over trading and psychology and things like that, but the statistics of you blowing up an account, stopping out at 1 hour every trade is going to be pretty tough to just wipe your whole account unless you go on just a huge downtrend. And then the last part, be capable to show up tomorrow. Even if you don't blow up and you take 15 trades and they're all losing trades, understand you stopped out at 1 hour at every trade. And if you can go ahead and say that your cat 1s and your cat 2s were all you traded that day and there was no ill-mannered disciplines or something, don't be hard on yourself. Realize you have to come back tomorrow and do it all over again. I know how I am when I'm hard on myself, and it had to become a rule for me. Be capable to show up tomorrow. That means don't be a bully and be mad at myself all day long and just not be able to show up tomorrow, or be ill-tasted when I wake up and I'm like, I don't want to deal with that again. So be able to show up tomorrow, the next day. So with that, we're going to start looking at our cat trades. And this is sort of how I back test things. I don't manually go into sim mode and start testing new strategies and things. What I want us to look at is our past trades, and are we doing what we said we're going to do? And we want to eliminate the errors and start replacing them with disciplines. So what we can do is, the first big stat that I review my trades on are break-even versus non-break-even trades. So you can see for this quarter, April through June, I took 87 trades, win percent of 27.5%, an average R of 3R. No big losers. Looks like I had one right there. If you've never seen this, this is another Mike thing that he likes to use. There should only be 4 outcomes for any given trade. Big wins, business as usual, small wins, small losses, break evens. Never big losers. And as you can see here, all pretty much 1 hour stop outs. There's a couple little big guys in here, a couple little small guys that probably just didn't work out. But overall, this is what you're looking for. If you're looking for anything other than this, just more of these, yeah, you're going to be a super profitable trader and you're going to kill it. But if you can't do this part, good luck. So from that, we're going to go ahead and say we took 87 trades. We'll go ahead and just remove the break even, just see what happens. So we went from 453. A lot of profits went down. And definitely our win percent went down, but our average went up. So from there, we can say, okay, well, we're not getting as many wins as we would hope based on this calculator too. We're looking at 30%, trying to be above 3R. We got the 3R above, but we definitely need to be a little bit higher. So now we're going to ask ourselves, what is stopping me from getting those win percentages? Is it discipline? Well, we can find out. We'll get rid of all the good trades and only have the fails and errors. Well, at 87 trades, it looks like I only did bad stuff 10 times. That's not bad. That's not bad at all. Saying that I took out $381 by poor risk management. It's not, it's not saying you're a good trader or a bad trader, but it's showing that out of the minority of your trades, you like what you saw and you're taking the setups that are in your trade book. So now we can start going to the other side and saying, okay, obviously it's the other majority out of the 80, whatever, it's the 70%. Well, we can remove the okay statuses and just say, how many times did I enter a trade and I exited when I said I was going to trade? 13 times out of 70. I think we might have found our problem. We're getting a lot more trades that aren't disciplined versus these trades that are happening a little bit more often. Maybe we need to start working on our entry a little bit better. But then we start, bringing the break evens and the okays back. And, this is every day. If you stayed in this room for the majority of your data, you'd probably be all right. So when we're looking at all these things, and you might see sort of an anomaly of some sort, like this one over here, you're starting to see minus 2R. Well, that might be a tiny problem, but this is how I organize data on a screenshot basis. So as you can see, I'll have it laid out between April, May, and June. Nice wide selection. This is just the day on how we can look at things. So you saw the colors, the green, the blue, the orange, and the red. Well, I can easily see I had a bad trade here. I had an undisciplined trade here and a break even right here. I can already see that day sucked. It was not good. Here's another one lost day, one winner day. Then you can kind of just look at, business as usual. Took 3 trades, maybe had 1 green trade, took 3 trades, business as usual. What is this? What is this madness? It looks like I took like 6, 7 trades today. And I have all this, stock just won't drop. Yeah, you can see emotion in my notes. Setup is there. This consolidation usually worries me, but we are setting up to move lower. Bigger the consolidation, the bigger the move. Like affirmations that I know this is what my setup looks like and this is what I expect. Broke the 135 and third attempt, risk was at half risk. Psychology wearing thin with this unsuccessful trade. You can see I took several attempts and I was getting wore down and I just couldn't do it anymore. So yeah, little anomalies like this and just saying, what was my psychology like and what was the problem that day? And then you can look at it like your really good days, like, let's see. 1 trade. Oh yeah, this guy. This is when we started Avi and The Avi8ors automatic levels. I noted that I was having dash issues and I couldn't figure out what was why. But yeah, you can see that I took the entry. Consolidation on the Avi and The Avi8ors level. Obviously not the best trade. I should have waited for this to come out and break out, but it is what it is. It was a winning trade. Got the ORB. Does anybody have any questions about journaling or the how, these last 2 sessions? If not, we can keep moving about statistics. A lot of this stuff I'm just trying to touch on. Looks like I've got 2 minutes before my hour's up, so I'm doing great on time. Everything after we can just ask questions.
Sorry, is this all Excel based?
Yes, this is Excel based. I did not design this by hand. I bought this software, and then the other one, this is also Excel.
So this is all okay. You bought this. You didn't.
I made this.
All this, right?
I made this, but the other one,
okay.
But the journaling, this is a $40 one-time purchase, and it doesn't look like this. I made it look like this. If you there's actually if you go into the Discord and in the search, look up trading journal, type in trading journal, it'll have an article that I put in there, and it has a YouTube video to this. And you can see the huge difference of how simple it kind of looks now to how busy it used to look.
Just a side question, if you have time. If not, it's okay. Have you used other journaling software, and is this Okay, so you just found this and you started using it.
Yeah, this was, I'm trying to run this business as efficient as possible. It really, I just opened the DAS account basically yesterday, and it was killing me to have to pay that 150 a month when I know I could just stick with IBKR and pay 20 bucks a month. The longevity of the business without unnecessary funds. But what come out to be the data that DAS comes with is very important. So I had to give in to that. But this was a $40 one-time purchase. What they really want you to do, and this is how I created on the other side of the how, is you would come in here, and this is how you would fill out every journal entry like this. I said, this is ridiculous. I can't do this every day. So I just copied their format and put it in the Excel sheet. And I already know that I'm step by step walking through how the trade works. And it's given me all the information I need as I'm walking the trade, being conscious of it. It's account one. It gives me the ticker, the date, the time we went over, all that. And then as I'm going through the trade, it's adjusting my size, my share size, my entry, how it performed. And it's just all nice and fluid. And I know some people are going to say, well, TradeZilla does all that for you automatically and things. Well, automatic isn't the process we're looking for in this, are we? We're looking to make it repeatable and try to help our trading. So if we start walking our trade step by step all the way through, there should be no errors because we're very conscious of where we're going to be at the end of every trade. And not this, well, if it comes down to this level, then maybe I'll get out. Well, is my 1R there? Then I don't need to get out. And there's a couple little mouse experiments I would love to try on some people just to see if it would help in performance. We talked about it earlier if you guys weren't around, but that's a different conversation, different time. So from that, I would take this percentage, or not percentage, this percentage, and this RVR, and say, am I in flow? Am I in this flow channel? But if I start holding trades for no reason beyond anxiety, then I'm just going to end up coming back to break even and be disappointed. But if I start taking trades too early, 1, 2R, I'm just going to get bored. And eventually my appetite's not going to be there anymore. So I want my 4 pillars of my home to be inside the flow channel at all times. And that's where I came up with the profit zone area. If I could keep an average win of 30% or higher, and my profit zone is between 3 to 5R, and my house is in the flow channel, I'm doing great. That's the reasoning behind all the profit zone and things like that. Just want my house to be in this box or further. Now, if I start seeing some disciplinary problems and I'm starting to go under 30%, it doesn't matter where I start taking profits in my profit zone. I'm probably not doing disciplined stuff enough to win. So this is where I like to be, right here. Even if you're up here, it probably means you're getting your 3 to 4R trades. You're just not winning enough, which probably tells me your setup is probably not right. So if we can just get our house to be slam right there, and then the house can just keep doing this up and down, or come this way, left and right. That's a nice easy average to maintain on a regular repeated basis, and not freaking out that, oh, it's not hitting my 4R target. It's not hitting my 4R target. It's 2 cents away from my 4R target. Well, if you have a zone, oh, it's at 4R. It's really not doing much right now. Oh, it's pulling back to 3R. I'm just going to get out. How much simpler and easier do you feel about that? That 1R is not going to make or break your day. Even if you're in the whole 4 or 5R and this was the only trade you won for the day, that 1R is not going to make you feel any better. That's why I'm trying to implement zones over single target executions. Because what happens if 2 seconds after you enter, it goes screaming to 4R? Are you just going to get out of the trade? That's when you leave profits on the table over your emotional reaction just to price goes. Let it hit in the zone. If it's in the zone and then exceeds the zone, just put your stop at the very edge of it. Or put it at 3R, wherever you want to put it. But let the trade get a chance to go. All right. We're going to move on to the final slides. And since audio is not working, we're going to skip that as well. So we talked about all the different monitors and things. I basically just have my DAS execution on the main screen. This is my overview channel. So when I'm not actually trading, this is what I'm looking at. Is it at an Fibonacci level? And then I can go to the operator screen and start really looking into the trade. If not, you can see this PRTR trade. I don't need to look at it. It's way outside the 8 a.m. candle. It's probably not anywhere I want to be. This Amazon trade, not at the level, but it could come back and retest if I thought it was going to go to the next level. And then over here, I have OBS, which I highly recommend for new users. It's super friendly to use. What I like to use it for in the beginning was if I was in a trade and I started hitting like an error in my DOS montage and I couldn't figure out why I couldn't add, or I couldn't get out of the position, or I flipped a position, I can go back and look at the recording and say what went wrong. Because if you don't do that, you'll never know what happened. You'll just see the arrows on your screen and what happened in real time. The recording will go back step by step, and you'll see, trust me, you'll see your mouse doing weird radical things, and you'll see your hesitation and anxiety through your mouse movements. So I have, every day I have my OBS right here, and then underneath of it is that trading journal that you see. So I would just take a quick snapshot of the main screen, post it over there, and then I'm on this screen, my house screen, my everyday driver. So I just post it here and just leave it, and then I'm back to doing this. Now I have where I entered and what the trade looked like when I entered, and now I'm managing the trade actively without worrying about anything else.
Ready for a prescribe? Here we go. A roof is a man-made thing. January 3rd, 1993, NFL playoffs. Houston Oilers versus the Buffalo Bills. The Oilers are up 28-3 at halftime, 35-3 early in the third. Frank Reich and the Bills come back to win 41-38 in overtime for one of the greatest comebacks in NFL history. Yeah, the Bills won, but they didn't really beat the Oilers. The Oilers lost that game. They beat themselves. Why? Because at halftime, they put a ceiling, a roof, a limit on their belief in themselves, a.k.a. the prevent defense. Maybe they started thinking about the next opponent at halftime, played on their heels, lost their mental edge the entire second half, and voila, they lost. In a mere 2 quarters, defensive coordinator Jim Eddy went from being called Defensive Coordinator of the Year and the man first in line to be a head coach next year to a man without a job in the NFL or even college football the next year. You ever choked? You know what I mean. Fumbled at the goal line, stuck your foot in your mouth when you were trying to ask that girl out on a date, had a brain freeze on the final exam you were totally prepared for, lipped out a 3-foot putt to win the golf tournament, or been paralyzed by the feeling of, oh my God, life can't get any better. Do I really deserve this? I have. What happens when we get that feeling? We clench up, we get short of breath, self-conscious. We have an out-of-body experience where we observe ourselves in the third person, no longer present, now not doing well what we are there to do. We become voyeurs of our moment because we let it become bigger than us. And in doing so, we just became less involved in it and more impressed with it. Why does this happen? It happens because when we mentally give a person, place, or point in time more credit than ourselves, we then create a fictitious ceiling, a restriction over the expectations we have of our own performance in that moment. We get tense. We focus on the outcome instead of the activity, and we miss the doing of the deed. We either think the world depends on the result or it's too good to be true. But it doesn't, and it isn't, and it's not our right to believe it does or is. Don't create imaginary constraints. A leading role, a blue ribbon, a winning score, a great idea, the love of our life, euphoric bliss. Who are we to think we don't deserve these fortunes when they are in our grasp? Who are we to think we haven't earned them? If we stay in process within ourselves, in the joy of the doing, we will never choke at the finish line. Why? Because we aren't thinking of the finish line. We're not looking at the clock. We're not watching ourselves on the Jumbotron performing. We are performing in real time, where the approach is the destination, and there is no goal line because we are never finished. When Bo Jackson scored, he ran over the goal line, through the end zone, and up the tunnel. The greatest snipers and marksmen in the world don't aim at the target. They aim on the other side of it. When we truly latch on to the fact that we are going to die at some point in time, we have more presence in this one. Reach beyond your grasp, have immortal finish lines, and turn your red light green, because a roof is a man-made thing.
And that will conclude the webinar on the 80/20 of not having a clue. If you've ever seen Welcome to Wrexham, if you're a big Ted Lasso fan, you should go ahead and give that one a try. And the intro song is very touching, very heartful, and basically talking about bad times, bad people, and coming together. And then says, "Don't forget to sing when you win. Don't forget to celebrate your wins." And that will conclude this entry. Question and answers.
Awesome, Shane. Thank you very much. Freaking awesome. What do you guys think, huh?
That was great.
I love it, man. You put in a lot of effort, and it's great. Good to see.
Yeah.
So, do some Q&A now. I could stop the recording here, and we could get into Q&A. I think that'll do.